Hello everyone, welcome to the Ichimoku.co chart of the day. Moving next over to the bonds and looking big picture here, the bonds continue to trade within this large zone of congestion following that very strong downtrending activity at the end of last year and this big congestion zone after over multiple months. The market is trading above each of the Ichimoku indicators, but that's not supported by the Chikas band. So something of a false breakout here above the Kijun-sen about a week ago. Lack of follow through has seen the attempted retracement now over the last few days back to, or over this period today, back towards that flat Kijun-sen. Sellers in control, some good commitment from the sellers here, and a loss of commitment by the buyers above this 154 level. Opportunity here for the market to continue trading lower, but looking at strong support around the Kijun-sen, Tenkan-sen, which are at 152.24 and 152.18. And just looking at our support and resistance levels, and the market testing around this previous resistance and support level 153.11, we have just closed below there in a bearish manner, so suggesting we could see further downside and looking for this 152 region to come into play, and it is a previous area of support and resistance at 152.19, so that's an important benchmark there. Now another benchmark to the upside will be this 153.11 area. At the moment in this new session we are seeing it holding as resistance. We could see selling come in, but if the market does trade in a bullish manner above there, we could end up testing back up to around this 154 level, perhaps even up to 154.27 if the buyers can find some strength over the next few days. But at the moment, in terms of the short-term dynamics in this current candle, it is one of the most bearish candles that we've seen for the last couple of weeks, and it does suggest that the sellers have built some negative momentum, and there is an opportunity here for them to test down to about this 152 region. Now just looking at our bands here and following the bullish breakout above the squeeze bands, we didn't see that strong required follow through. The market is now just closing within the bands. It has failed to hold as an area of support. We've just tested within there. At the moment in the new session we are finding resistance at the upper band at 153.13, so an important area, and there is a possibility if the market does sell off from that resistance for the market to test to the middle of the bands, 152.10, where we're likely to find strong support. And in terms of the relative strength of, that's the gold, back to the bonds here, in terms of relative strength versus the equity space, TLT 20 plus year Treasury bond fund, and here we see on a relative strength basis the weakening process has begun. If we look at the momentum of relative strength, it ticked down a day earlier than gold, and we have now seen the relative strength move lower, so we're seeing an end to that moderate outperformance that we saw previously, the momentum moving lower and suggesting that we could move into a weakening quadrant here with the potential for the relative strength versus the SPY ETF to move below 100%, and then eventually for the momentum of relative strength to move below that 100%, which would see a stock that is significantly weak, but at the moment, or significantly underperforming, but at the moment it is perhaps the start of a potential underperformance, but we're certainly seeing an end to that moderate outperformance that we saw previously. So it does suggest that we haven't seen any significant shift of capital into bonds as an alternative investment class to the equity space.